Off-grid energy impacts investors. All On has partnered with Danish technology company Solstroem to develop a platform to make off-grid solar distributors issue and sell carbon credits on the international voluntary carbon market. Karim Jabbar, CEO and co-founder of Solstroem, joins me to discuss this. Karim, thank you so much. It's a pleasure to have you on the show today.
Thank you for inviting me. It's a pleasure.
Before we go into the details, just help us understand how the Solstroem program works, just to give our viewers a good starting point.
Yes. So the Solstroem program is you could say, a tech-enabled program, meaning that it addresses operators in the off-grid space that are familiar with data or that use data to monitor the solar systems that they're deploying. It could be solar home systems, it could be mini-grids, microgrids, and the way the program actually works is that it allows these operators to send data to our platform, which we will then convert into a carbon metric, and that carbon metric essentially becomes micro-carbon offsets that are available for purchase on the international market.
Okay, talk to us about this partnership with All On.
Well, All On, we're very pleased to work with. They invested in us, it was announced yesterday, and this is the second investment from actors in the space or investors that are active in the off-grid space. Recently, we had a similar type of investment from Persistent Energy that people in the sector are familiar with. The purpose and the use of proceeds, if you like, is essentially to duplicate or leverage some of the work that we've already been doing in Latin America and in East Africa, and essentially focus now more on West Africa and Nigeria in particular, so that we can ensure that the emerging body of smaller scale operators in the off-grid space can actually also access the carbon market, which is very difficult for them to do currently because the way the system works in order to issue carbon credits requires a lot of upfront fees. It requires these companies to hire consultants to actually work with standard setting bodies in order to develop their own projects. And from the date that a project is initiated until the carbon credits are issued, you could see maybe 2 or 3 years pass by. And it's needless to say that climate action is needed much faster. And also these operators can't afford to sink this money for a couple of years when they have more pressing things to do, which would essentially be to deploy more physical systems on the ground. So, yes.
Just to be clear, what from this partnership, what is the big picture here? What are the key outcomes that we should look forward to?
Well, you should be looking forward to you could say, a more thorough collaboration with All On in order to identify companies that are currently operating in the off-grid space. It could be investees that All On is working with, or it could be other operators, and Nigeria is in the industry actually seen as the most promising, you could say, market for this, as energy access is really anchored as a solid area of priority. And there's entrepreneurs and companies that are trying to work at distributing solar home systems and small setups to clients in the ground on the ground that actually cannot afford to pay for these systems up front. So in a nutshell, what we can expect to see, hopefully, is going to be a surge in number of Nigerian companies that through this opportunity will now have the capability to issue carbon offset credits on a registry and access international carbon markets, meaning that there's going to be a transfer of monetary value going the other way from emitters in Europe and North America, other parts of the world, which essentially means a transfer of capital in hard currency back to Nigeria, which is much needed, as we heard in our previous story, or the first story today.
Well, absolutely. Now, analysts tell us that to meet the UN's goal of universal access to electricity by 2030, Africa needs to scale both on and off-grid investments, which has been estimated at $350 billion. Now, we've seen more traction, especially in the solar space, solar investments, particularly, I'll use Nigeria as an example, in the northern part of Nigeria. But I know that this is, this is popular or gaining more ground in developing economies outside, even outside of Africa. But of course, I always ask this question, what more can we do to scale? I know that what you're doing, and this, of course, this partnership with On is great, and it's helping this, solar startups to scale, making life easier for them, etc. But on a general note, for developing countries where, access to electricity is still a challenge, what can we do to scale?
Yes, and it's a very, very relevant question, and I think it's one of those questions that needs to get addressed from multiple sides, and there's not one single solution. There's a number of things that can be done, and obviously a lot of these projects in rural areas and so on are already pretty much intertwined into flows of overseas development assistance and into development finance of different sorts, which obviously needs to continue. But generally speaking, there is an issue of additional revenue streams. So essentially, in order to make a project attractive in a context where, unfortunately, there is going to be high default rates, there's going to be projects that are not going to go through as intended, it is still perceived as being a high-risk setup. So therefore, all kinds of initiatives that can be more data-driven, initiatives that can actually enhance a focus on results-based finance, for example, or the generation of carbon credits, as we're doing as an additional source of revenue, all contributes to de-risking the perceived risk of actually putting money into this. So at the end of the day, it's fair enough to argue, in my opinion, that the flow of capital into the sector should be much higher. But in order to make it much higher, it's everybody's responsibility to try to de-risk the perceived challenges of actually putting money into the space. And data, in my opinion, could be a very good way of doing that. So either through solutions such as we're prescribing, or through other types of results-based finance in general.